Welcome to Gold Weekly Recap. It is the second week of, this is for the second week of March. Solid moves on gold. We'll go over each and every day. Massive moves. And if you know exactly what to look for, shit can make you a lot of money. So looking back, over here, when gold was here, when we initially had the break of 1760, right? What this break represented, if we look on daily time frame, I'm just going to take off all the levels, okay? If you look on daily time frame, we broke past this low from November 30th, right? And that was a monthly level. So once we broke past that, and we can look at lower time frames, once we broke past that level, right, which is right here, this area, created a low price. We knew that when price was going to retest it, it was likely going to continue. And where was it going to continue? To a daily demand level here. So I'm going to open this again. Daily demand here, as you can see, a solid zone. You can draw this zone out, right? Massive zone. It's a weekly level, daily level. So it was going to react to that, right? So during that time, we called sells from 1760 all the way down first to this range, right? And then eventually make its way down to 1700, 1680s. And that's why I called down the analysis from 2 weeks ago. So it took 2 weeks for it to move down 1,000 pips. That is massive, right? On Monday, what we saw happen was price pushed up. Initially, price pushed up. As soon as market opened, it pushed up from 1700 to 1714 in 30 minutes. And then price started creating highs, right? Creating highs, consolidating within here, creating a lower high. So when I was looking at gold during pre-London, it was evident that once or if price broke back below that consolidation right here, this low here, that likely we're going to make our way down first to 1700 here and then possibly even lower. So I took sells as soon as gold, and I'm going to just replay here because it's easier to do that. Okay. So 2 minute, looking at this here, you can see, okay, price is coming back down here, creating lower highs, right? Lower highs being formed. So you're thinking, okay, if we break down, at least push down to here, 40 pips, and then further downside if that breaks, right? But there's always a possibility that price can push back up before pushing down, right? But we know that, okay, if that happened, if this broke below here, and then we broke below this level, this push up was the weekly wick on top of the daily wick on top and the weekly top wick. So fast forward, boom, this is 2 a.m. Eastern, so an hour before London open. As soon as this candle closed, the next candle retested this area, and that's where I entered sells. And you can see perfect retest of that and straight continuation down. I got out over here. So my stop loss was only 6 pips, and this was a little over 30 pips, right? So 1 to 5. But I got out there, and because I thought we might reject this area and make our way up before coming down, right? Create that lower high, such as this lower high was formed before moving our way down. But momentum was so strong, right? Momentum was hella strong. So what happened was prices continued down. And here's another good point of entry. We created a new low. We're below this level, right? We're perfectly retested it before, a couple minutes before. And then London Open retested again. So during London Open, that's another solid area of entry. And as you can see, price just kept continuing down over New York too, broke past this structure, right? Look how perfectly it reacts to these higher time frame levels. And all you have to do is just wait for price to get to these levels and see how it's going to react, and then base your trades. Boom, close below, right? Break a structure back down here and continue down. So that's New York again, and then New York going to push down, right? moving forward. So that, and then eventually price made its way gold made its way all the way down there. Okay, tapped 1680 by 11 a.m. Oh no, it tapped at 10 a.m. Solid move. Now, since we're at this daily demand level, after gold has just moved down 1,000 pips in 2 weeks, you can start expecting some sort of market structure shifting, right? So here, got a low, okay? Now we can see, okay, that can be set as possible higher low. Now price is above this 1680 level and it keeps rejecting it. So now we watch price action. You don't have to be entering here because just let price set up, let market show you what it's going to do. Boom, retest again, right? Oh, now we broke past here, this minor structure, continue up. Continuing up, came back down, right? Came back down again, right at the level. Like these higher time frame levels are, they actually work, right? So when you look at 5 minute, you can see market structure is now shifting. Oh, now what we can start doing is we know exactly where our higher time frame levels are. So if we know we're going to go bullish, then we can start looking for entries at those higher time frame levels. Like, look, rejected it exactly, right? So as soon as price started closing up, these were indication that gold was now reversing. We don't know for how long, maybe for the time being, God knows, but all we have to do is follow market structure, right? Look, break up, okay. Here, structure here, London open, retest, buys here, and you can buy up to here. Or buy up to here. Just from here to here is 50 pips. Your stop loss is very minor because you're watching price action in this area. And you can see retest of structure, London open pushed up, higher low, keep going, and it pushed up at least first till here, which is 50 pips. And then we closed above here, right? Closed above 1700. Next level is like 1711 area on 4 hour. 1 second, I'm just gonna remove all these. So next level is like, oops, on 4 hour, we can look at it. We have, oh, that's before. So we have 1710, right? We had 1725 and then 1739 area, this candle body right here, candle bodies here. So you can see how these levels are drawn, right? They're drawn at higher time frame candle bodies. None of these candles are closing below. These candles didn't close below. And the higher time frame you go on, the better this works. And I'll show an example of what I mean by that exactly. Okay, so, and then here, so now gold is above 1711, 1710, right? We're consolidating above here, as you can see. Where's the next range? The next level is 1725. So you know that this buy range hasn't been completed. So what this consolidation is representing is it forming a higher low. Where would entries be? You would take entries during session times, specifically London and New York for this. New York works amazing. But as you can see, it pushed below this level. That doesn't mean that price is now going to retest this level and go down. That can happen, but that's not what happened, right? And you're not trying to guess what's going to happen. We're trying to follow what price is showing us. And in this case, if you were up during New York, which I don't usually trade, but sometimes I'll wake up if gold is setting up nicely, right? Look, rejected this pre-New York, closed. Now we're pushing back up, higher low, closing above this level, above 1710, 1711, higher low, showing us, okay, maybe now that volume is going to kick in. Gold has just been consolidating for the past day. Maybe it's time for it to go up. Right here, London open, New York open, retest, right? Another higher low. So best entry here would have been here or here. Either one of these points where price started closing above here, then your stop loss is quite low. It can like 20 pips down here, less than 20 pips, and then your take profit can be 1725 or wherever you feel fit. In this case, price went up to 1724 before coming down, but eventually what happened was it did reach 1725, right? That buy range got completed, right? So that's also a solid setup happened in Europe. But as you can see, it's best to take setups on gold when price is actively reacting to those levels. Over here, reacted to it, came down. Here, price reacted to it, so you could have taken buys here. Over here as well, price reacted to this minor level. Same as here. After it pushed up back above 1700, last time it broke below 1700, we got a retest before pushing down. Here, we pushed up, got a retest before pushing up. So you see how actively reacting to levels, that's when we take trades. Some people took sells from here. You could have taken sells because you're following market structure, right? And market doesn't only move in one direction. So when we're looking at it right now, price started rejecting 1739 area, right? Closing below it. These are your lower highs. I personally wouldn't take these. Like, you don't have to take every single movement, but you can see that, yeah, we just reacted to this key level, broke down. So it's possible that we continue down. First, it came down to 1725, right? And then, so now that we look at it, okay, broke past here, and here's another 6 setup. Price breaking past back below 1700, 1710, previous level where we saw price activity, price retest, right? Retest before pushing up. Same thing here. When we're breaking down, coming down, now we know that currently market structure is bearish, right? Market structure is bearish, gold is bearish. So retest of this level, stop loss above here, and then 100 pip move straight down here, right? Amazing market structure, level to level price action play. And in this case, it's 100 pips, right? Massive like movement. So clean price action movements. And then when price got down here, just remember that we just had a massive push up, 600 pip push up. So there's still a possibility that price goes bearish because this is just a retracement, right? Where currently an intraday structure is bullish. So that's what you got to watch for. And then what happened was price came down to 1700, came down to 1700. This is why I say always enter when it's actively reacting to these levels, because it increases the probability of your trades by a lot. Same with GJ that you saw in the previous setup. When it actively reacts to these key levels right here and right there, your probability of trades is much higher than versus you entering in the middle right here, you know? Those are impulsive entries. Those aren't smart entries. So let's say you miss these buys because you're just waiting for it to set up, right? Okay, now what you can do, same thing that happened here, price reacted to this level. Okay, we pushed back up, reacted to it. Buys from here to there, right? Although it's Friday, you don't have to take these, but you can see I'm just trying to show that these clean moves happen regardless. And look, 1 to 7, 1 to, this is a little more than 1 to 4, 1 second. 1 to 6, right? Solid entries at market structure. Even if you entered over here when it first retested, your stop loss shouldn't have gotten hit, right? Above here, market structure right there. 1 to 6. Here we'll make this a little less because that's just overall runner. If you exit there, 1 to 5.8. And this one, where I messed up and I took profit too early, this could have been a 1 to 10, or over here 1 to 5, right? Over here, you could have entered buys at London Open, like we talked about, and then or over here as well. So a lot of possible entries when gold is actively reacting to market structure, right? And high risk reward too. But the thing with gold is that you got to have a stop loss that's a little wider. So you can't use the same stop loss. Like GJ, if you use a 10 to 12 pip stop loss, majority of the time, 15 pips, always safe. Gold, it's usually 20 pips will have you safe. 1 to 5, another 1 to 5. So solid. That's 1, 2, 3, 4, 5, 6 setups on gold, and all of them are above 1 to 5, right? And in both directions, you're just playing what market's showing you, and it's just every time it comes to these levels, there's some sort of reaction, right? And then we get our move, massive move down, close below it, rejected here, okay, push up, pushed up, back above here, push back up to this level, right? Price action to price action, level to level play, and super clean, right? As you can see, gold has just been moving super clean at these levels, and these are levels from before. These aren't all new levels. These are actual historical price points from years ago, right? And you can backtest that. And what I wanted to show back in November, and this is why I place emphasis on these candle body levels. I'm just going to open up another gold because I don't want to take off that chart because I already have my levels planted. But so I'll show exactly. So in November, we saw a massive move down and price came down to a monthly key level. And exactly when it came down to that monthly key level, we saw price. What the fuck is this? Okay, much better. What the fuck was that? You guys saw that? What in the fucking garbage is this? Anyways, besides that, let's go back to November 2020, which was right here. Boom. Okay. So look where I'm going to place this level. Right at that candle body, okay? Makes sense? 1774.5. All right, let's fast forward a couple weeks. Price is moving down. Why is it playing like this? Like, okay, boom. You're telling me market reacted exactly to this level before pushing up 2,000 pips, before pushing back up to this supply level, right? Push back up to the supply. So this area was that monthly level from 2012. And as you can see, monthly candle body, price push back up 2,000 pips. So when these levels work for a reason, right? And they work super well. So plant your levels. That's how you plant my levels. I get so many questions in the comments asking people are asking, how do I plant my levels? Bro, I explain this in every single video. You guys just don't watch it properly. You guys watch 2 minutes. I see my insights. I see my analytics. Y'all watching first couple minutes of the video and like watch it all, like retain the information. That's how I draw the levels. And they work super well on gold, especially. But that's it. 1, 2, 3, 4, 5, 6 proper setups, high risk reward, all above 1 to 5. See you later.